Well, switching gears from equities to equity markets, the Chicago Board Options Exchange, or CBOE, has made a move to allow companies to list on its exchanges in the U.S. and globally for the first time. What will this change mean for other exchanges like the NASDAQ, and what implications can this have for investors? Let's bring in Thomas Caldwell, CEO and chair of Urbana Corporation. He's also past governor of the Toronto Stock Exchange. Thanks so much for joining us today.
Thank you.
So how significant is this, that the CBOE is going to allow companies to be listed in the U.S. and globally?
Well, they tried to do this some years ago with very little success. To knock off incumbent exchanges in the listings business is very tough. New York and NASDAQ, very hard to go head-to-head with them. And even in Canada, with the Toronto Stock Exchange's dominant position, the incumbent has to do something dopey to let you in. For example, New York would not list tech companies. NASDAQ did, and that's how they got established. In Canada, it's a little bit different. Coming up fast in the inside in the listings business is the Canadian Securities Exchange, and I'm a large shareholder of that, just in the interest of disclosure. But they had 41 new listings this year of companies. Toronto Stock Exchange had 57. 50 or 34 of those were exchange-traded funds, and NEO 3. Now, NEO is the venue they're going to try to use in Canada. Their advantage might be to try to connect it with international, but this is going to be a little bit of a tough game. And the reason CSE got so big is Toronto would not list cannabis companies, so that gave them the entree to reestablish. And CSE is going to be able to go head-to-head with both Toronto and NEO. So it's going to be tough in Canada, but it is a tough game. But listings is where you want to be in the exchange business. That's the sticky part of your revenues.
So CBOE, it did acquire NEO and is now CBOE Canada, though. Isn't that right, Thomas?
Yes.
Okay.
Yes, that's it.
Okay. Okay. So why is it that listings is the business that you want to be in?
Well, listings, those are revenues that are relatively stable. Remember, exchanges make money from trading securities and data, and those are two interconnected, by the way. The more trading, the more data revenues you get. And the last is the listings business. This is what establishes the London Stock Exchange, the Toronto, New York, et cetera, and to an increasing degree, the Canadian Securities Exchange in Canada. So that's the one it's your more solid base of revenues. Trading comes and goes. It's a will-o'-the-wisp.
Right. Okay. Okay. So when it comes to the competition, I mean, you laid it out really. It's interesting, the historical context that you laid out for us. Future competition. How do you see this playing out?
Well, in Canada, just speaking to that, one of the new things that happens, and again, I'm talking about CSE, and I don't mean to talk my position, but it's an underrated competitor here. It has just been granted by the Ontario Securities Commission the right to list senior companies, exchange-traded funds, SPACs, et cetera. So what this means is they can go head-to-head with both NEO and the Toronto Stock Exchange, and they have been very effective competitors. Certainly in the venture area, they've been eating the venture capital exchanges listings business for some time. So the competition are going to have three players in there, ranking TSE, CSE, and NEO. All of them have advantages to some degree. If I look forward in the future, though, this kind of smacks of somebody wanting to take over somebody else to try to narrow the field. Because remember, the market in Canada is not a big market, and it's been shrinking over the years. So that's three pretty aggressive groups. I wouldn't be surprised if somebody tried to take over somebody else in this game, but that's just pure guess on my part at this stage.
Well, that's okay. Yeah, it's good to hear your guesses as well, Thomas. When you're thinking about this from the investor's perspective, if there is more competitions on the listing side of things, what sort of benefit could that potentially have for investors?
Well, you compete on several bases. Functioning. That is your systems, how fast you can trade. That's one. Price is another one. Clearly, price is a competitive advantage or disadvantage. So it benefits the listings companies doing it. Brings down your cost of listing. I'm an advocate of competition and not afraid of it, but you just have to think better. And part of it is customer relations too. The service you provide for a company to go public. It's a big event for companies, and a lot of them need assistance. So exchanges that really empathize and enter into that and help in that process they're going to get more listings. And we've seen that with the way the numbers are working out at the present time.
When it comes to when it comes to CBOE Canada, what sort of companies do you think will be gravitating toward that?
Well, it's hard to say because so far this year they've only got 3 companies. A lot of these exchanges are listing what's called ETFs, exchange traded, and all they are is a basket of existing securities. They aren't new companies. So, I mean, and by the way, CBO are very competent management, and I know Josh Schmidt at NEO, I consider him a friend, very competent executive as well. They'll think of some value added. If I were in their position, I would try to play the international part. That is, if you get listed on, say, CBO Canada, you might be listed on CBO's quote machines in Europe, et cetera. So you might be able to use that as a competitive advantage to broaden your exposure. But all of this is good because it forces people to think, come up with new products, different pricing mechanisms, and different levels of service. So competition it's going to help. But I think in Canada, where the capital markets are really evaporating for the last several years, it still smacks of an environment for takeover mergers still for the next little while.
Thomas, we have